Hello and welcome to Fidelity Connects. I'm Pamela Ritchie. Canada has voted. The Liberals have secured a minority government. Led by Mark Carney, the party is leading with 168 seats, falling just shy of the 172 needed for a majority. The Conservatives are set to remain in opposition. So what could a fourth Liberal mandate mean for Canada's economy and ultimately your investments? And how is Canada and the world ultimately reacting to this news? Very happy today to be joined by our panel of experts to break down the results of the federal election. David Herle is a former top advisor to Prime Minister Paul Martin and host of the popular political podcast, The Herle Burly and the Curse of Politics, which listens to both of those. David is also a partner at Rubicon Strategy. I'm also joined by Fidelity Portfolio Manager David Wolf and Fidelity Vice President of Tax and Retirement Research, Peter Bowen. Now, before we jump into today's conversation, a quick reminder that this webcast features a live French audio interpretation, so please join us in either official language. Welcome to all of you. Thank you for being here.
Thanks.
Delighted to have you here. David Herle, great to have you join us. Let's begin with David Wolf, if you don't mind. The market reaction, what was the expectation? What was either the worries leading up to it? And what are we left with, even if it's not showing up today? What does the market implication here?
Sure. So markets haven't done anything with this, and that's not surprising. I mean, at the end of the day, the outcome was, very much within the range of expectations, and let's face it, there are bigger fish to fry in markets these days, other than the Canadian federal election, particularly the policy environment, if you can call it that, in the United States. So it's not surprising markets haven't done anything with it. Canadian dollar is basically flat, Canadian stocks, et cetera. I think over time, markets are going to tend to like this outcome. And the reason I say that is I think there's been sort of an undertow in Canadian assets, whether it be Canadian dollar, TSX, even to some degree sort of pricing in bonds, that had to do with the markets not being thrilled about the economic and fiscal management at the federal level under the Trudeau government. Mark is very different. That's his area of expertise.
And you call him Mark because you know him well, because you worked with him at the Bank of Canada.
Yeah, so I served as his advisor when he was governor of the Bank of Canada, obviously, many years ago now. And I can testify to the fact that he's really smart and really disciplined and really hardworking, and cares a lot about policy, and he's going to be in the weeds on fiscal, on economic, on tax policy, et cetera. So, but I think there's also, the prime minister is the prime minister, and he has this expertise. But I think it's being underestimated. There are some other really good, experienced people coming into government as well. So, for example, a couple of other folks that I used to work with. It's a small world here in Canada. So Carlos Letao, who I believe won election in Quebec, used to be finance minister of Quebec, was longtime chief economist at Laurentian Bank. And then Tim Hodgson, who used to run Goldman Sachs in Canada and was with us at the bank for some time as well. These are really experienced hands, and I think unlike what we've had in the Liberal government for 10 years, so Mark is going to have some help. So I think ultimately, yes, we can talk about the specific policies that, may or may not come to pass, but just having that expertise in government, I think ultimately is going to, be favorable as far as the market's view on what's happening in Canada.
That's so helpful, and it's so interesting, sort of the context of it. And ultimately how we're going to think through this when we watch market reaction. David Herle, I'd ask you, I think you're running on maybe 45 minutes sleep, so we're very delighted that you're here, coffee infused and all. Tell us a little bit about the surprise element of a minority government. Is it a surprise? I mean, I don't know, it depends on who you talk to, but talk us through the minority government that looks like we're sitting with.
I think it is a surprise because I think expectations and the forecasts of the seat models had been for probably a narrow Liberal majority would have been the consensus going into the election. So it is a surprise. I think we have an effective majority government, though. First of all, there are some people in the Liberal campaign who believe that when all the vote counting is done, they will have a majority. I don't know whether that's true or not, but they believe that. And secondly, there are 7 New Democrats and 1 Green, and those 8 votes are not going to be voting for an election anytime in the next number of years. And so I think that Carney really has an effective majority. in the House of Commons. But I think if you want to understand the campaign, I think it's best understood around the decisions of four people that really led to this outcome. The first decision and the first person is Justin Trudeau, who resigned. Justin Trudeau doesn't resign. There's a more than 200 seat Poilievre majority sitting in the House of Commons right now. Second thing is Carney decides to enter politics and run. If the Liberals are led by any other leader in this circumstance, they lose and lose badly. Carney was a deus ex machina in the game. The third person and the third decision is Donald Trump. And Donald Trump decided to enter Canadian politics, not only impose tariffs on us, but trash talk us, threaten our territory, demean our existence. And that collapsed significantly the Bloc Québécois vote, which went to Liberals and Carney to be the people who will fight Trump. Quebecers reacted to Trump more viscerally than anybody else in the country, presumably because they're aware of what the French language rights laws are in Louisiana. And then the fourth person in the fourth decision is Poilievre. Poilievre and his campaign manager, Jenny Byrne, and she articulated it for a number of years on The Curse of Politics, was there are more conservatives out there than or Aaron O'Toole or Andrew Scheer getting to the ballot box. And if you run as a real conservative, if you stop this nonsense about moderation and moving to the center, if you run as a real conservative, there's a lot more conservative votes out there. And she proved that theory correct last night. They got way more votes than they've gotten for a long time. But what they also did at the same time is scare the bejesus out of most of the NDP vote, because they were presenting such a stark conservative option that the NDP literally collapsed in the face of it. And I would say 3/4 of that NDP vote went to the Liberals, and about 1/4 in some key ridings went to the Conservatives.
Okay.
So that, in a nutshell, is what got us, I think, to where we are today.
That is so interesting. Okay, thank you for sort of painting the map of what we've just witnessed and watched, and for those that stayed up late, actually saw come through in the end in the result. Peter Bowen, I'd love to get your thoughts on tax policy ultimately that the government has imposed in the last several years, and basically how different you expect it to be going forward.
That's an interesting question. I mean, David made comments about the Trudeau Liberals and their policy issues, and I think a lot of the tax changes that were made were driven by what drives votes, not what's good policy. I'm hopeful that that will shift going forward. We're told we're likely to have a budget by Canada Day, in fact, so lowering the lowest tax rate from 15% down to 14%, which is not all that big a deal. It's actually not too dissimilar from what the Conservatives were promising. It also impacts tax credits, lowers the value of those, so it's really not that big a deal. Yeah, hopefully the policy decisions will be more thoughtful about what's good policy for the long-term tax system than what we've seen.
As in a little bit of reform, like real. I mean, a real tax reform is sort of quite a massive.
Well,
thing,
they've promised to take a look at the corporate side of things,
right.
Corporate taxation, but not personal. So I'm not optimistic that we'll see simplification there or big changes. I mean, we're still going to have very high top marginal tax rates across the country. Right. Okay. Most provinces, that top marginal tax rate is above 50%. I don't see that changing.
David Wolf, there was lots of discussion about how company leadership would like to work with different types of government, and I think there's lots of room for discussion there. But in terms of leadership, of those leaders in Canada who would like to work with corporate Canada, with big companies, with small companies, with the economy, tell us a little bit about what sort of leadership has just been elected to this country. Mark Carney, what sort of leader will we watch unfold here?
Yeah, so I mean, as I just mentioned, and I think folks have seen that to some degree through the campaign, as experienced as you could find, and somebody who actually will rarely get into politics, which to David's earlier point, if it's somebody else in the seat right now, they're probably not in the seat right now. I mean, I have a number of stories from the time that he and I were working together. One of the ones that sticks out in my mind, so very smart guy, very experienced guy, but incredibly into the weeds and the details of policy proposals. So I recall when we used to go do international meetings, we would get these briefing books on all of the policies that we need to agree on internationally, and some were big and some were small, what have you. And these things were thick, like
Right.
these were big
Major
briefing
reading.
books. And so I remember sitting in the briefings where you had folks whose basically their whole career was this little piece of policy, and the now Prime Minister would say, well, on page 236 of the briefing book, you're asking us to support this initiative by the Germans. Like, can you explain that? Because I'm not sure about this. And I'm thinking, I may have made it to page 236, and I was probably half asleep, and I have no idea what was on that page. And the detail and the diligence and the discipline. So he wants to get things right, and that's always been the case. And the corporate sector may have wanted a more, kind of laissez-faire type government. Not clear that you would have gotten that with the Poilievre government, but Mark is someone who very much understands the economy, understands what corporate leaders need, and understands the importance of the market, right? So I think, we'll see, but as you can probably tell, I have a bit of a leaning here because it's somebody that I've worked with and I have a huge amount of respect for, and I hope he's great for the corporate sector from a Fidelity portfolio manager point of view who's invested in Canadian companies, but also as a Canadian, I hope he's very good for our country. I think he will be.
If I could just jump in.
Yeah, I was going to ask you to add in on sort of bandwidth for the ability to be, obviously detailers but there's a lot to do. But pick up on that, please, David Herle.
Yeah, I just wanted to build on what David was saying, which I certainly agree with. But I think you should expect this government to be no less centralized than the previous government was, but expect it to be centralized in him, not in his staff. He will be the driver, and he will be. And the other point I wanted to make, and David may or may not want to comment on this, but the Prime Minister is a very, very stern taskmaster for people who work for him. And he has very high expectations of the people who work for him. And I think cabinet ministers transitioning from Trudeau to him are in for a rude shock. And I've got one funny anecdote to illustrate it for you. In the Trudeau cabinet, there were Kleenex boxes in the cabinet room because people used to occasionally cry. Well, the Kleenex boxes have been removed.
There's no crying.
Do
you have anything? Do you have any analogies?
I make no.
No, I need a Kleenex.
No, I will nod and tacitly agree with David in terms of the Prime Minister can be hard on his staff, is very demanding. I personally appreciate that because he cares so much, and that's why, and doesn't want substandard work feeding into what he's trying to do. But yes, it can be more challenging for his staff.
David Herle, can I come back to you on bandwidth? So that's quite fascinating, but there is just so much to do. We were talking about some version of tax reform. We're not sure whether that'll happen. But it sounds like the plans are to retool an economy, which is an enormous task. And also, we'll get into the USMCA in a second. But just speak to us on bandwidth. I guess every government has a lot to do, but put this into context. Seems like there's a lot more.
Yeah, and I think he is going to manage his bandwidth so that he is laser focused on the economy. That is certainly my expectation. He has walked into a situation where he's telling us that the United States is not and never again will be the economic partner that we have known it to be. And therefore, if Canada is going to be the leading economy in the G7, if Canada is going to be a prosperous place, a lot has to change. And I think he understands that. And I think he will be delegating other aspects of domestic policy to ministers and holding them accountable, as I said. But I think he will be reserving most of his bandwidth for growing the economy, getting the economy going, and frankly, not just growing it, but retooling it. And I guess this is the place where David was referring to a more laissez-faire approach. I don't think you can look at the ideas he presented in the campaign and not believe that he's a strong believer in industrial policy and strategy.
Okay. Really interesting. Do you want to pick up on that? I have a question for Peter on tax in a minute, but.
Yeah, sure. It's kind of an interesting juxtaposition to your point, David, that he has a profound understanding of and support of the market system, but is also naturally interventionist. And how those sit side by side is going to determine a lot about sort of what we see in this country going forward. I do want to pick up first a joke that I heard with respect to going back to him being very involved. Being Mark's finance minister is actually either going to be the hardest job in government or the easiest job in government, right? Because he's going to be so involved in what's happening there, which I think is to the benefit of the country, but we'll see going ahead. I mean, one thing that I think is important in picking up on one of your comments, Pamela, about what corporate Canada wants, I mean, they'll have a voice in all of this, and I think that'll be useful. I think what they want above anything, and certainly all of the portfolio managers that fold into my funds or talking to these folks every day, is they want clarity, right? They want clarity about what our policy is going to be here. They want especially clarity about what the policy is going to be in the United States as it affects tariffs and trade and all this kind of stuff. And hopefully this government will provide the clarity it can in short order, but clearly the uncertainty that we have coming from the United States is sort of irreducible at this stage. And so it's still something that we have to think about a lot just from a macro point of view in terms of how we're investing, is to say, even if we get things sorted out in Canada, so long as you have that uncertainty hanging over companies, you're going to get a hesitation to make capital investments, to hire, and ultimately that in and of itself, wherever tariffs end up, is going to be holding the economy back to some degree.
David Herle, I might ask you to just outline your thoughts, what you hear, what the word is on how quickly these conversations might get going. I mean, we keep hearing that there are trade talks happening with the Trump administration with countries all over the world, and that they'd wait for the Canadian election to end. Well, here we are. So just give us a sense of what you hear on a timeline to get going on this, and then we'll talk about the pieces.
Well, I think there have been, I don't know if they're negotiations, but conversations going on all along. But it remains an open question what the value of a conversation with somebody in the Trump administration is, if you're not talking to Donald Trump himself. Because nobody seems to either be able to speak for him or to even tell you what he's going to do about something. I would expect that Carney and Trump will speak today. And I would expect that they would initiate their conversations almost immediately. I mean, that's what he's promised us. And I think whether the process is a renegotiation of the USMCA, I don't know whether that's even a worthwhile thing to do or not. I mean, given what Trump is saying about the auto sector, like, you can't be more clear. Like, we don't want your cars. It's not a question of negotiation. We don't want your cars. So Carney's talked about a comprehensive economic and security understanding with the United States. I presume that's a complex thing to negotiate. Take a little while, but I would be surprised if he didn't start on it today.
Okay. Peter Bowen, tell us a little bit about some of the components that have to do with U.S. trade, non-tariff barriers, thinking of sort of digital tax and these types of things that are very much in the conversation for Canada and the U.S., also with other countries around the world. Just chunk out a couple of the pieces from a tax perspective that we might be talking about when we get into a trade negotiation.
Right. Well, Canada now has I think it's called digital services tax, and there's movement towards a global minimum tax as well, being driven by the OECD and in the Liberal platform. They're actually explicit that they want to continue down that path. And I'm going to look down at my paper here to get the words right. We will not surrender on rules that ensure large multinational companies pay a fair and consistent share of profits they earn in a country. And where that becomes relevant, and why I think they've stated that, is there's a bill in the US. It's just a proposal. May never come to see the light of day, but there was an article in the Globe and Mail a couple of weeks ago covering this, to increase the withholding tax on US dividends paid to foreigners, Canadians, for instance, that have these types of taxes, which the US doesn't seem to like anymore, and increasing the dividend withholding tax rate from 15%, which is the treaty, which is signed and one would think would be respected, but to 35% initially, going up to 50%. So again, we have no idea if that bill will ever see the day of light, but it just points to one of those tensions that exist. And by saying we will not surrender, it's that poking them in the eye, perhaps a bit, to say, look, you can do that, but we're going to hold our ground here because we think it's the right thing to do.
And
but it
what is
just
the
can
reaction
create
therein?
more tensions on the tax side.
From watching the Canadian economy go through other trade discussions, some of them hugely beneficial, some less so, what do you think the economy is bracing for here? I mean, we're looking at job losses. We've already heard them. We know that the tariffs act as a tax, possibly inflationary. There's sort of discussion of stagflation. What do you think that the Liberal Party is aware is going to happen and probably we should all be bracing for, essentially?
Yeah, so I mean, I'm not sure that the government kind of can predict U.S. policy any better than you or I can. There are a couple of things to mention that way. So first, obviously, tariffs are a huge challenge. The uncertainty surrounding tariffs, again, wherever they may end up, is right now having a chilling effect on business investment and the like, which is holding the economy back. But it's important to keep in mind there are a couple of other pieces that are important that nobody is kind of thinking about anymore, but haven't gone away. The first piece is we're now in the thick of the mortgage renewal cycle for all the stuff that was 2020, 2021 at super low interest rates. It's now resetting quite a bit higher. Not as much higher as we would have feared a year or two ago, but still higher. So that's a shock to the economy, to the consumer. And then the other issue is we are having this reversal in these migration flows, where we had population growth of over 1 million people for a couple of years. On most estimates for this year, it will be 0 or close to 0, with the number of temporary residents actually coming down a fair bit. That's a pretty big shock to the economy too. And the final thing I'll say is, even if you take the premise, which I would, that ultimately the policies that this government are going to enact are going to be positive for growth, that's more of a long-term concept than a short-term concept. And in the short term, depending on what one does in terms of fiscal stimulus, is not necessarily going to help at all, right? So I think, what we would look forward to, and maybe I'll split it up in a couple of pieces. In the short term, the Canadian economy is going to be weak. We may have a recession, we may not, but it's almost impossible to avoid that given these forces. What we're looking at for the long term, and now I'm speaking less as a former economist and more as a portfolio manager, as I think probably everybody who's listening and watching today knows, we have been substantially underweight Canadian assets, or the Canadian dollar, Canadian stocks, et cetera, for a long time. We've started to close that in. That has more to do with weakness in the US than strength in Canada, but we've started to close that in. And I can definitely see, call it a light at the end of the tunnel, where if the Canadian economy weakens further and you get a further discount on Canadian assets, if these longer term forces are looking a whole lot more positive, that would be a great entry point to come back to Canada as an investor, where you have a relatively cheap currency and you have a relatively cheap stock market, and if better things are happening in terms of growth and corporate productivity and what have you, that could be a great opportunity. So as a portfolio manager, that's one of the most important things for me.
Okay, thank you. So helpful. David Herle, I want to ask you about pipelines. Can we expect Carney's support for an energy pipeline going from east to west?
Yes.
Okay. Oh, that was great, because we don't have a lot of time left. So that was very helpful. Thank you for talking a little bit about that. Excellent. Let's do a quick discussion on Pierre Poilievre. So he has lost his seat. What do you expect, David Herle? Do you expect him to quickly get to another jurisdiction and get voted in?
I do. I mean, well, quickly isn't really up to him. His job is to find somebody in his caucus who will step down and clear a seat for him. I presume he won't have any trouble doing that. And then the Prime Minister has to call a by-election, and I presume that would be done expeditiously. So let's say he's back in the House in 4 months or something like that. I presume that's what he's going to do. There's a civil war going on in that party, and it's fought over a number of fronts. There's personalities that are involved. There's federal provincial divisions that are involved. There's Ontario West divisions that are involved. There's movement conservatives versus progressive conservatives. And they're all fighting over what the best approach is, because they've tried a number of different ones, and they have, to be blunt, lost 4 elections in a row. And so there's a lot of soul searching going on in there. He's going to try to maintain his leadership, and there will be people that will argue that he got more votes than any conservative in a very long time, and he did very well in the circumstances that Donald Trump presented him with. That will be the pro argument. The con argument will be that, frankly, they kind of got as many votes as they did by taking him out of the frame. He was not in their commercials for the last 10 days of the election. It was the golfing ad and attack ad on the Liberals, and it was a Stephen Harper endorsement.
We're going to swing to the discussion that I think has come up in every interview that you and I have ever discussed, and this is the issue of productivity, and it fits well with taxes because there's obviously some tax ways to go at the productivity problem in Canada. And it's, David Herle, what you think that Carney will be laser focused on as well, because it comes into the economy. There's lots of ways to go at productivity. What's your favorite way to enter this conversation? Then we'll go to the tax discussion.
I will just say productivity in this country has been anemic at best for the last 4 or 5 years, 10 years, 20 years, 30 years, if you're looking at growth, lagging hugely behind the United States. I think there's probably very few, if any, people in Canada that have dealt with the challenges to productivity as much as the current Prime Minister, and that's not just in his current role or as the Governor of the Bank of Canada, but we need to recall he also was Associate Deputy Minister of Finance many years ago, and so knows the budgetary process, knows all of the analysis that goes on in Finance Canada. If anybody can do something about the productivity issue as just one person, it's him. We'll see if he can.
Right. Okay. I mean, it's
David. David, what do you remember, and what do you make of his comment more than a decade ago when he was Bank of Canada governor about Canadian corporations sitting on dead money?
Yeah, I mean, I think that was an attempt to get them to spend more. And, you know, it's
productivity, right?
Yeah, it's related to the issue of anemic investment is one of the factors where you just don't form enough capital to be able to drive that productivity. But I mean, the issue is you can hold cash on your balance sheet. If you have profitable opportunities, you can still deploy it or borrow it. It's not the cash itself, it's the what do you see as the opportunity. And one of his main jobs, and he knows this, is to get people to see more opportunities to invest in this country.
Outside of housing, which is one big piece.
Well, and housing.
And housing. Okay, and housing. Peter, we just opened up housing, actually. Take us through some of the tax potentials within the housing conversation. This may be part of the platform. I did not know about this acronym, but apparently goes back to the 1970s. What is it?
MERB.
MERB. Okay.
Yes.
What are MERBs? Thanks.
Multi-unit rental buildings, I believe it is, something like that. And
tax incentives.
Tax incentives. So almost like a tax shelter, where if an individual wants to invest in these, there will be a vehicle that you can invest in and get tax deductions, tax incentives that will encourage building multi-unit residential or rental buildings. And it's one of the more interesting things in their platform as a tax geek, and it is stolen from the 70s.
Is it really?
So we used to have it and bring it back. And you would invest in
that, as in it would be available to developers, to more people in the public markets? How would
individuals? Would there'd be a vehicle set up, and you could invest in that vehicle, and then you'd get a tax incentive as part of that investment, a deduction of some sort, for instance, for the cost, like the capital cost allowance on an apartment building, for instance.
Right.
We'll have to see what the exact details look like and whether that's in the upcoming budget. I'm guessing not, because I suspect building this out will take some time to get the policy details right. But it'll be interesting to see when that comes to market and how much that actually does drive additional residential building.
Let's talk a little bit about the budget. There has been a promise to get one pretty lickety split, but we also, Canada needs one. I mean, it's been a while, and it's obviously a very new government. So.
We're a bit late, but that's understandable in what we're dealing with. By Canada Day, to lower the lowest tax bracket by that 1%, which is only going to make at most $400 per person difference in their tax, and that will be effective as of July 1, so it's only a half impact this year. They do want to reduce RIF minimums a one-time deal only for this year by 25%. They did that back at the start of COVID. To me, that doesn't mean a whole lot, honestly. Boosted GIS by 5% for 1 year. And there are a number of other things going back to the productivity, continuing the ability to expense, investments in machinery and equipment for corporations, and that does go to, again, productivity. Introducing flow-through shares to the startup ecosystem is another thing they're talking about. So there are elements in the platform that are clearly driven at the productivity question. Again, I wouldn't think we'll see much of those in an upcoming budget, just because drafting tax legislation and getting it right, it's complicated and it takes time.
Yeah, absolutely.
Pamela, if I could just say, I think that the low-income tax break is really a measure designed to compensate for the cancellation of the carbon tax.
Okay, I was just going to ask about that. Yeah, okay.
Because most low-income people were getting more from the rebate than they were paying in the carbon tax. And so when the carbon tax goes, the rebate goes. And so those people would actually be worse off than they were with the cancellation. So that particular low-income tax break is designed to replace the carbon tax rebate. I would be extremely surprised if that was the limits of Mr. Carney's tax ambitions once he gets into this.
Okay, interesting. And I mean, at this time last year, not at this time last year, in another month, we were talking a lot about the capital gains. So it is a different landscape.
Absolutely. I think that's clearly off the table. The increase in the capital gains inclusion rate is clearly off the table. They still have to clean up some other things. The lifetime capital gains exemption for sale of small business shares, jumping to 1.25 million as of June last year. That's still not passed into law. Presumably they will do that. There's something called the Canada Entrepreneur Incentive that was proposed a year ago, which we don't know if that'll see the day of light. I mean, it's to reduce the capital gains inclusion rate from 2/3 to 1/3. Well, if we're not at 2/3,
then that doesn't really
does it happen or not? And it's complicated and targeted. We'll see. And even things like the donations, right? So people are still doing their tax return. They can claim donations made in January and February of this year against last year. That's, again, a one-time offer. It's not law yet.
Right.
So we'll presumably see that coming into law.
So let's go to David Herle on how quickly things might move once Parliament sits, because there's been an awful lot of stuff put off to the sides because Parliament hasn't been sitting. So what do you expect to see moving quite quickly? A couple of pieces of policy, if you would, that probably will get either moved on or introduced, or what?
I think that there's a couple of issues that they need to move on reasonably quickly. I think one of the first things that will happen will be a First Minister's meeting. And I think that he's going to try to get everybody on board, and I think they're going to have conversations about things like east-west pipelines. He's made it pretty clear that he doesn't intend to force that on Quebec, but that Quebec seems more open to the idea than it has been before. So maybe that's a possibility now if it still makes sense market-wise. I also think that the housing thinking was fairly advanced. And I'd be surprised if they didn't move relatively quickly on the housing policy front. But so much of his time is going to be taken up mentally in preparing a budget, which is going to have to really be a blueprint. Like, that can't be a baby steps budget. It's got to be here's the game plan.
Will it be related to the costing platform at all?
Well, I think it will be related. But, as Paul Martin repeatedly, the author of the Liberal platform in 1993, repeatedly told the bureaucrats, do not feel bound by that. Tell me what we need to do. Give me your best advice. And I think Carney will be the same. I don't think that the Liberal platform is some set of tablets that the public service must now go around and implement.
Let's talk high level about the investment opportunities with new policy. And we don't know what the policy is, but countries around the world, businesses will make sure that they at least have an ear to where policy is going in terms of a direction. Do you see a direction that would help you ultimately down the road invest? Just how can you speak about that? Because it is something you have to pay attention to, obviously, for opportunities.
Yeah, I mean, I think what's happening in Canada with the desired reorientation of our economy away from the US, maybe desired or necessary reorientation, towards being more self-sufficient and also more engaged with the rest of the world. That's happening in other places as well, and other places that are actually less directly exposed to the US economically. I'm thinking about Europe in particular, where one of the issues in Europe not only has been kind of a moribund economy for a long time, but also has been that it's been very hard for the various European countries within the EU to kind of get their act together to work in concert, whether it be through fiscal stimulus or regulation or what have you.
Eurobonds,
this is,
for instance.
Well, yeah, I mean, so just as Donald Trump was kind of a main actor galvanizing and affecting what's happening in Canada, that's happening in Europe, that's happening in other countries as well. And that actually can be seen as a real positive for Europe from an economic point of view. Again, like in Canada, that will take time to play out. So one of the things we've been doing just in the funds and the managed portfolios that I'm responsible for and some of the other funds as well, and we wrote some thought leadership about this, I think it was 6-7 weeks ago, is we had started basically January 1st of this year, but accelerating in February and March, moving money out of US equities, which were kind of priced for perfection, into places like Europe, Japan, some emerging markets as well, on the issue that the US, again, was, I think the way that we put it in the piece, markets were priced for sort of maximum US exceptionalism, just at the moment where the new administration seemed to be wanting to undermine pretty much all of the things that made the US exceptional. And that was a recipe for wanting to get capital out of the US, where the US dollar, US stocks, treasuries, et cetera, into other areas where we thought we would have either less risk or more potential return. And so we did, billions and billions of dollars of that in the funds. And it's helped a lot with respect to protecting the funds in what's been a volatile period with some serious drawdowns.
Looking very smart, if I might say. Very interesting. Let's finish off a little bit with USMCA. And I mean, maybe there isn't a lot to say. I don't even know what we're calling it. What used to be NAFTA. And you've mentioned, David Herle, that you think the conversation is happening today between Donald Trump and Mark Carney, and so somewhat off to the races. We don't know how to look at this, but we have been through other trade negotiations with the Trump administration in Trump 1.0. Can you have any sense of what maybe the team might look like? Maybe not names, but it's going to be a mix of old and new people that are going to be involved in these negotiations, do you think? Or it really is sort of man to man in this situation?
Well, it's so difficult to talk about this because who knows what the decision-making process is in Washington and what roles anybody plays in it. Like the trade officials don't seem to know what the policy is from day to day. And so, a lot of it will depend on what Carney, I think, and Trump are able to work out personally. Certainly that will set the broad direction. And, I think David was saying earlier, the most important thing to come out of this is certainty, whatever the result is. It's the uncertainty that is killing investment. What will the team look like? Mr. Carney's going to have to appoint a permanent chief of staff. Now that he's taken office, he had Marco Mendicino, the former public safety minister, as his interim chief of staff. He may stay on permanently. I don't know. Chief of staff will definitely be very involved in those conversations. And then it will be the key economic ministers, which I don't think, to go to another point David made earlier, I don't think will look the same as the Trudeau economic ministers did. I think you can still expect to see champagne floating around in there. But certainly the two names that David mentioned, Tim Hodgson in Toronto and the former finance minister in Montreal, I think are going to be critical parts of the economic team as well. And so I think
and Dominic LeBlanc as well.
That was the last name I was going to mention.
Okay,
is LeBlanc? LeBlanc gets along with everybody. Dominic's a hail fellow, well met, gets along with everybody, has a good common touch. Seems like Trump doesn't hate him. So yeah, I would definitely keep Dominic LeBlanc in the window.
Okay, interesting. To you, Peter Bowen, just for sort of a last thought on, I guess, what every Canadian needs to just be thinking about in terms of their taxes. The tax is going in tomorrow, so they're thinking about this anyway. But what is the landscape based on what we know about Mark Carney as a person and what has been said thus far? What's going to change? Anything massively, or it's mostly on the corporate side?
I don't see anything changing massively, at least in the short run. I'm very encouraged by David and David's comments about Mr. Carney being pragmatic and policy oriented and very smart, passionate. So I'm hopeful that will be a good thing. This year's been a bit of a mess from a tax return filing perspective, as many financial advisors and investors will know. So hopefully that gets cleaned up over time fairly quickly, but we'll have to wait and see. And that budget, well, that'll be interesting.
That budget will be interesting. I'm sure you'll be locked up and reading it and bringing it to us.
That's the plan.
As you always do. Okay. David, what would you like to leave us with a little bit? We've got a new, well, it's the same government that's been in for the last few weeks, but we do have a new government, new policy. Are we optimistic on Canada going forward from an investment markets perspective?
I would call myself hopeful.
Okay.
I mean, optimistic, I'm...
That's too wishy-washy.
I constitutionally, try to be objective rather than optimism, pessimism. Actually, it was Governor Carney 16 years ago, in the teeth of the 2008-2009 crisis.
You can call him that as long as Trump doesn't.
Okay, there you go. But he was asked about whether he was optimistic, and he said, David, you may remember this one. We don't do optimism, we don't do pessimism, we do realism. And we, as investors are the same, right? We're making the decisions based on as clear-eyed a view as we can on returns going forward and risks associated with those returns. And as I said, I think the flow of information, both from the US and Canada, means that we probably will see a bottoming in terms of the relative attractiveness of Canadian assets, and will go up over time. And that's
Canadian
a really
bond
encouraging.
Flows as well?
Canadian bond flows. The bond market is a whole other issue, because that has to do with some of the foreign financing and treasuries and the bond vigilantes, what have you. But when we think about the Canadian dollar, when we think about Canadian equities, at least on a relative basis, they have underperformed over the last 10 years. And again, I'm hopeful, but we need to see it, that we could see outperformance going forward.
Okay, fantastic. Just a final word to you, David Herle, on what a different page we're turning here, if at all. Just sort of end us off.
I think it's a massively different change. I think Carney is a change agent. And I think that he understands the economy better than any Liberal since Paul Martin. And to be honest, I can't think of anybody I know in Canada that I'd rather have in this position at this time. I think he's going to be outstanding.
Okay, thank you, gentlemen, for joining us on this extended conversation for Fidelity Connects. David Herle, a pleasure to see you always. David Wolf and Peter Bowen, thank you. Join us next time as well.
Thanks for listening to the Fidelity Connects podcast. Now, if you haven't done so already, please subscribe to Fidelity Connects on your podcast platform of choice. And if you like what you're hearing, leave a review or a 5-star rating. Fidelity mutual funds and ETFs are available by working with a financial advisor or through an online brokerage account. Visit fidelity.ca/how-to-buy for more information. On fidelity.ca, you can also find more information on future live webcasts. And don't forget to follow Fidelity Canada on X. The views and opinions expressed on this podcast are those of the participants and do not necessarily reflect those of Fidelity Investments Canada ULC or its affiliates. This podcast is for informational purposes only and should not be construed as investment, tax, or legal advice. It is not an offer to sell or buy, or an endorsement, recommendation, or sponsorship of any entity or security cited. Read a fund's prospectus before investing. Funds are not guaranteed. Their values change frequently, and past performance may not be repeated. Fees, expenses, and commissions are all associated with fund investments. Thanks for tuning in. We'll see you next time.